Welcome to Money Matters. I'm Charlie Shields, Wells Fargo Advisors, LLC. My co-host tonight is Michael Karwic of Iron Valley Wealth Management. And I know you're wondering when the banks are going to start loaning money and we're going to get this economy rolling. So our special guest is Paul Mitchell, First CornerStone Bank. So we'll check with Paul and see what's going on in the banking industry. It's going to be a good show. Stick with us. Michael, good to see you. How you doing?
Thanks, Charlie. Great. How about yourself?
Real good.
Good.
Well, I noticed, I don't want to time this show for our viewers and listeners, but I noticed Apple was talking about one of the features is going to be that they're going to help people with identity theft by their new systems, their iWatch and their iPhone 6 and all this sort of thing. I know identity theft is a big deal. Talk to us a little bit about what's going on with identity theft and why Apple thinks this is going to be a big business for them.
Yeah, you know that's a major factor in the markets these days with as much electronic information as we're putting out there, that old school identity theft and now new school identity theft is prevalent. So we actually just had the regional office of the FBI come out to our office to talk with us about the topic. So thanks to our regional supervisor for that. Spent some time with us talking about the most likely ways that people's identities and money are attacked. So some of the takeaways that we had for that is, despite the large-scale companies that have recently been infringed upon, it's actually more prevalent. The smaller scams, the old-fashioned scams, and new digital versions of those scams are coming around. Unfortunately, it has its own new language. The skimming and phishing are a couple of the largest ways that criminals are getting at our information and our money. Phishing, of course, PH phishing, being that they're sending out emails or regular mails, but they're trying to send something that resonates with us, like the name of some local banks or some local stores, and want you to click on the email or call the number and prove you are who you say you are, when really they're the ones that aren't who they say they are. So be wary of emails or mails if they don't seem like they're legitimate from an organization you know of, whether it be Apple or any other institution. Go through your normal channels. Go through the phone numbers you know are correct. Use the phone number on the back of your credit card, not the one that came in the letter in the mail or the email, to verify it. Because if you use the information that came to you that you suspect is fraudulent and call that number, well, they're set up to just take your information and your money. So make sure you go through known routes.
Well, now that we've got our viewers and listeners nervous, let's come up with a couple more ideas how they can protect themselves.
You know, one of the largest ways, again, this is coming from our chat with the FBI, that people can protect themselves is really through the home computer. Making sure that your virus protection software is up to date. And I smile when I say it, because the other one that comes to mind are passwords. It's one of those things that we all know we should do, and I talk to people time and time again, and they say, yeah, I know the rules. I'm supposed to use a different password for everything. It's supposed to be going hard to guess, and I'm not supposed to write it down anywhere. And change them, as frequently as you can. So that's very hard for people. So there is software out there that can help randomize your passwords, aggregate your software. So one way we can do it is make sure that our home computers are locked down, because that's one of the ways they're getting at our information. And secondly, give a thought to a technology audit. I did it for my office, and I did it even for my home systems. It doesn't cost that much money. I spent on my home system perhaps $250, which is certainly real money. But I dealt with people who've had their identity stolen, and they have spent years and years and thousands of dollars to try and reclaim their identity, because you can't take that information back, right?
And man hours writing letters and getting your credit cleaned up and all that. So
they wish they could go back in time and spend $200, $250 to get an audit done to lock things down better. So that's one thing I would say. Have a professional look at your system and make sure the virus protection software is up to date, and that all of your behaviors are doing all that you can to protect yourself.
Great. You got any questions you want to ask me?
You know, we recently met each other, and I understand your background. You've got a number of years, a full career, frankly, in the U.S. Navy, and a full career after that in the financial services industry. I thought you would be a perfect professional to ask a little bit about the global markets in particular.
Okay.
So let me start with that one. There seems to be a lot going on in the world that we could be concerned about. There's been no shortage of headlines in the last year and a half in particular. I mean, ISIS, Ukraine, Russia, and yet the markets have showed a lot of strength. Do you think that that's somewhere we should think about putting some money, or does it concern you and we should just stay completely at home?
Sure. Well, you know, I do have a 26-year career as a Navy pilot. That doesn't make me an expert in foreign affairs and that sort of thing, but I have an opinion, and I believe that the reason the market is holding in so well is if you think about what ISIS is doing, trying to establish turf that they're going to live on, that's the kind of war we're pretty good at fighting. And when people are hiding behind rocks and planting bombs and that sort of thing in the sand, we're not good at that. So I think the reason the market's not too worried, I think they've figured out that if ISIS tries to occupy a part of Syria and a part of Iraq, and they own that ground, then they have to occupy it, and we'll know where they are, and we can have a lot of fun taking care of some very bad people. So that's one reason I believe the market is hanging in.
I knew you'd have a good perspective with your background, so yeah, that's a
Thank
unique view on it. So given that the markets have been resilient, given that interest rates are really low, are there other places, or where are you looking to get clients a good balance between risk, but we need some return for our long-term financial safety? Where are you finding any opportunities out there today?
Well, as I see it in the United States, price-to-earnings ratios, depending on which industry sector you're looking at, maybe are 16, 17 times earnings, which sounds high versus previous history. But when you're competing with a 2.5% 10-year bond, those price-to-earnings ratios are probably pretty reasonable. And for our viewers and listeners that don't know what a PE is, when you think price-to-earnings, if you have a PE of 17, you're buying 17 years worth of earnings, assuming that the earnings would stay the same for those 17 years. So I believe that price-to-earnings ratios could go some higher. If they get up to 20, I'll be real interested in seeing if interest rates have risen, because one way to look at PEs is if it's a PE of 20, if you're paying for 20 years of earnings, flip that over 1 over 20, you're getting about a 5% return. Right now, the 10-year bond is yielding about 2.5, but if those yields go up to 3.5 or 3.75 in the next year or two, considering the stability of bonds versus stocks, then people might want to shift some money over from stocks to bonds. I'm not personally ready to do a lot of that yet, but I am thinking that PEs have a little bit more to go in the stock market. Interest rates may rise over the next year or two, and so that's what I'll be telling my clients to look for within the U.S.
Gotcha. Now you mentioned interest rates. It seems that even the 10-year and even longer interest rates are really still at historical lows. Gold has come far off of its highs. So with gold being low and interest rates, even long-term rates being low, does that mean we don't have to worry about inflation? I mean, historically, some rules of thumb would tell us just that. What do you think on inflation for the long haul?
Well, my opinion about inflation is the three vigilantes tell me the story. The dollar, is the dollar strong, which is a good sign that we won't have inflation. If the dollar starts getting real weak, as it did in the late 70s, that's a trouble indicator. The long-term interest rates, if they start going up, the 30-year bond, if that starts going up, heading north through 5% towards 6%, that's a big red flag. Watch out for inflation. And if gold can turn around, it's been in a downtrend from 1900 down to below 1300. And if gold starts to turn around and start really moving up, that's the other red flag for inflation. So right now, all systems are clear for inflation, but I know that the present Fed makeup, there's a lot of doves who don't want to raise interest rates aggressively, and if they are not raising rates as the economy really starts to turn around, then inflation may come back. So watch the three vigilantes.
And speaking of the three vigilantes and some politics, midterm elections around the corner as well. How do you think that could influence the investment markets?
Well, the market seems to like gridlock, but I think we have too much gridlock right now, in my opinion, because we can't get anything through to the White House because we have a Senate that's blocking the ideas of the House and a House that's blocking the ideas of the Senate. So it's my opinion that if both houses go the same way, which in this particular case would probably be a newly Republican Senate, then maybe they'll try to put some bills together to send to the White House, and they'll have to be careful what they say because they have a Democrat president who will veto a bad idea. So they may have to craft an immigration policy that is so reasonable that the president would have to look bad if he vetoed it. And they may have other ideas. So that's my general idea of what I think might happen, but we'll have to see. We will have gridlock after this particular election. Now it's time for me to ask you a question that one of the viewers sent in. And this came in from Rich Hepburn of Philadelphia. What are some strategies for sudden wealth for a long-term investment? Suppose Aunt Millie leaves $4 million in her will. What should he do?
Yeah, now you may have read that that's an area that we specialize in at Iron Valley Wealth Management, is working with people with large transition events in life or sudden wealth events. So that's a great question. I'll give you the two biggest tips I would start with, and they are the ones you would begin with if you suddenly came into some money through any variety of means. Right. Number one is we utilize a tool that we call the decision-free zone, which is to say to take the stress off, to organize your life a little bit, take a step back, and simply it's a tool that helps clients to organize the items that have to be done now the urgent items, those that can wait a little while, and those that are much later. Because very often when people go through a major transition in life, we see them getting very overwhelmed with all the decisions, and they really need a little help parsing that out and saying, you only have these 3 things we really have to decide this week. You've got to realize that you can take a breather, and you don't need to decide those other 2 things, what to do with the house or the car, or a number of decisions that can be later, and some can be much later. So 1 is prioritize. Number 2 is test and measure a little bit with this new wealth. This is probably the number 1 area I see people go through new wealth faster than they should. And we all read about the stories with the lottery or inheritance, if you will. Find a way, instead of buying that beach house or buying an extraordinary car or something extravagant like that, test it out. Rent before you buy. Try a new sport, try a new instrument by borrowing, leasing, whatever, to make sure that you like it first. Because we see people spend a lot of money on a brand new item, whatever that item might be, because they think it'll bring them happiness. And as it turns out, after 3 or 6 months, they're bored with it. So test and measure a little bit, see if you really like what you think you will, and then spend the money judiciously.
Good answer, and I'll add to your response that people should probably get someone to work with. Find someone who doesn't charge an excessive amount, that you have confidence in, because newfound wealth, if the market starts to go down, someone who's new to that could get very worried and panic at the wrong time, as a lot of people did in 2008. So thank you for that excellent response. We will now show our viewers and listeners how to send in a question if they have one.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Now we'll have a chance to talk to Paul Mitchell, First Cornerstone Bank. Paul, thanks for being here tonight.
My pleasure.
Talk to me about what's going on in your industry.
Well, lots is going on in the industry. I've been in the industry for quite some time. There have been extensive changes in the last 20, 30 plus years. A lot of it has to do with acquisitions, larger banks buying slightly smaller banks, familiar names after 100 years disappearing off the face of the earth, and then new banks appearing out of nowhere, just being created by some entrepreneurs that think, gee, there's a vacuum in the marketplace. Then you have lots of new banks all fighting each other. Then you have these recessions that wipe out portfolios. You have financial engineering in the banking industry. We have terrible crisis. The whole industry almost imploded. Big familiar institutions had to be bailed out by the federal government. What happened to traditional, basic, unexciting banking? Mm-hmm. You want to buy a house, you put 25% down, you borrow the rest, you show you have the income to pay for it. That's what banking used to be, and basically it should be. It's not supposed to be a high-risk business.
Sure.
It's just supposed to be putting money together and investing it for a return for the benefit of the community. The other big thing that people don't really see, but within the banking industry, when I joined, there used to be training programs, 2, 3, 4 years, where a young person with a college degree, without a college degree, would join a bank, would never see a customer, would have no authority whatsoever, just be trained for 1 to 4 years. I don't know of any bank that still has that program around. So how do people learn about banking? Banking the right way. Lots of people are hired, for example, to sell banking products and services. They may have been a manufacturer's rep the previous year. Have you seen the ups and downs of banking?
Okay.
So lots of changes.
Good, Michael.
So you mentioned a lot of the things going on in the banking industry, the large banks that even got larger, it seems, over the last few years, if not decade or so. So how would you compare the smaller or regional banks to those behemoths that are out there?
Sure. Well, the larger banks, I mean, if you're a national bank that is with branches in most of the states, there's an awful lot to control. You need to have control systems, and we've seen situations where there weren't those controls in place First, the banks just about failed or did fail. Secondly, in more recent years, when banks weren't following regulations properly, huge fines. Not tens of millions, not even hundreds of millions, but billions of dollars of fines. So it's a lot to control. So big banks have to have a lot of controls in place. They have to create boxes. We do things this way. Here's our policy manual. We do this in all 50 states, in communities all around that state. If it were in, let's say, New York State, the same policy in New York City, in upstate New York, does that really make sense? They're almost like different countries. But big banks have to operate that way. Smaller banks are more nimble. They limit themselves geographically, generally, to their community, maybe within an hour or 2 hours drive of the community. They know the geography, they know the people, they know the reputations. They're a lot more nimble. They don't have necessarily as firm boxes. So if a situation makes sense, they know the people, they could do it. It's not, they don't have all these big policy manuals that limit them to, we don't do this type of situation.
Paul, can you talk to us about 2 or 3 of the biggest issues you think that are facing banks right now?
Well, I was referring to one, compliance is probably one of the biggest issues. And you think, well, you can just take care of it over there. But it affects every aspect of doing business. What you say, how you follow up. Again, the fines if you don't comply with the regulations can be huge. But also it's just the amount of manpower and actual dollars spent on compliance issues. You have to hire people to go through files, to audit files, to make sure the proper procedures are done that satisfy the government. You have compliance issues that are huge with Homeland Security. After 9/11, terrorism money flowing through from one bank to into another bank or to industry or around the world. To open an international bank account now, it's not a simple procedure. It can take weeks.
Yeah,
for everybody involved.
I was thinking about that when the ISIS got a hold of this bank with $500 million in it, and they actually owned the bank because they took it over. And I thought that's going to be a real interesting problem when they start trying to figure out how to launder money and they own the bank. So it's getting pretty sticky, huh?
And believe it or not, one of the red flags are, it's a nonprofit. Well, nonprofit is innocent. Well, the bad guys know people think that nonprofits are innocent, so they set up phony nonprofits as a way to funnel money. So it's a red flag actually now in the industry.
Now I have to jump to one of the purposes for banking. With everything going on in the world and the concerns on the compliance side, are you able to lend money these days? I get that question a lot from people. Is it being lent?
It truly is, and banks are actually they're competitive with each other. They're trying to grow loan volume, loan portfolios, because they need to generate more returns on their money. With interest rates so low, you got to try to make it up with volume. Now, the compliance issues do keep a damper on the ability to lend. For example, it's very prevalent in say the home first mortgages for homes, where first home buyers have very difficult time getting financing because credit scores, their job experience, all these things have to be checked off. With small businesses, it's getting easier, but with just about every business, everybody had a problem a few years ago.
Sure.
With the economy being so much in the tank. How can a bank look at a situation like that and say, boy, several years ago you had a real problem. How can we justify lending you money? Well, that's getting a little bit more behind us now, a little more history. I'd say the thing that really makes a big difference when getting money these days or not is the business person's willingness to let the bank get to know them very, very well. We had a situation recently at the bank where someone said, well, I'm not going to give you my tax returns, but you should lend me the money. I mean, give me a break.
Yeah.
We need that information not only to learn about the company, but also to satisfy the regulators who, the examiners, they come in, they look over your portfolio, look over your loan files and all. You don't have enough information here to justify a decision you made.
But most people understand that you have to be able to respond, don't they? Is this unusual for someone to refuse to disclose information?
It's not that frequent, but it's indicative of the problem, and it goes further. I mean, I had a situation recently where I put together, in the course of 2 weeks, 39 questions. After receiving the financial statements, after getting all the information that really was required, question about this, question about that. How come this expense went up so much? How come this went down? How many people do you have on the payroll? I'm trying to learn about the business.
Sure.
The more I get to learn about the business, the more comfortable I am, and the better I can communicate with others that are involved in that approval process, and the better we can help the client.
Sure. Well, you hear all these stories. Venture capital is out there, and you know the Shark Tank on TV.
Yep,
these guys are sitting there and decide whether they can give somebody some money. So you get the impression there's a lot of money out there for the right idea.
Yes.
But is it really? I mean, the economy seems to be struggling a little bit. People can't get a loan for their mortgages. So what's really going on Main Street?
Well, it's a combination of things. The institutions, like let's say the venture capital funds, private equity funds, a lot of them have gotten pickier and pickier. So you have industries that have grown up that didn't exist, whether it's 5, 10, or 20 years ago, such as non-bank lenders, companies that lend money to businesses. And they're not subject to regulation.
Right.
They don't have compliance issues, so they can do certain things.
And they probably don't have the same amount of money that has to be set aside, the banks, because
Exactly.
it's too big to
There is
fail.
there is no regulation about their set-asides, okay? It should be prudent, otherwise they're going to have problems if you make loans that don't work out. So you have non-banks, and they lend to big businesses, medium-sized businesses, all kinds of businesses. You also have venture capital money on the internet now, such sources as what's called crowdsourcing, where you and I can actually, let's say, get on the internet and look at people looking for money for deals, for investments in their company, a startup company, a growth company, or whatever, and I can put in $100, $1,000, $10,000.
Okay.
Not very well regulated.
No.
The other thing you have to look at, what's the structure of these investments. A lot of them can be very onerous. The loans can carry rates of 10, 20, 30, even 90%, 100%. So you need money now, you get it. Can be very onerous.
At the risk of giving you a plug, I mean, I've seen some clients go through the process of applying through banks, and the banks will come back with a number of questions that they ask. But frankly, I've only seen the companies really have to sharpen their pencils on their business plans and think through some issues. I've actually seen them benefit from the additional due diligence that they have to do to get approved. So
that's a good point.
Really, it's helped both sides. You have loans that'll perform, and they've looked closer at their business plan. So while sometimes it's thought of as a challenge, trying to get approved, maybe the bank has some good points and concerns.
Yeah. So it's a little bit of an attitude adjustment, I'd say.
Yeah,
sure.
yeah. Now, do you have any specific deals, either by name or just in general, that you enjoy doing, or a deal that stands out as one that was one of your favorites?
Well, one certainly does stand out. It's a little bit of history now. It was about 20 years ago, but it was a small company at the time called Urban Outfitters.
Sure.
Heard of them.
The institution I was with provided mezzanine financing. And what made it so memorable really is that it exceeded everybody's expectations by multiples. Most deals or investments, or whatever, that people do, bankers do, investors do, if projections are met, that's glorious. But this was far and wide, and it was a very memorable occasion.
Rewarding experience, no doubt.
So you were lamenting that they don't really have good training programs for bankers.
Right.
So how does someone become an expert as a commercial lender now? What would be the ideal for a youngster who's just finishing school, thinking about getting into this business? What would the path be?
Well, one path would be to try to become an analyst at a bank, and a financial analyst. They don't really do a lot of analyzing, but they do a lot of, I'll call, the grunt work. For example, a financial statement comes in, the bank tries to put it in a certain format, they call it spreadsheets, okay? The analyst will read the financial statement, take the numbers, put them in the program for the spreadsheet, so everything is done in the same format, okay? And then the analyst will try to do some analysis, look for trends. Sales are up, why were sales are up, okay? But generally that analyst is going to be inside and have little contact with the company that produced the financial statements. But that's one way, so it's very financially oriented. But you get to see how the bank works and talk with other senior officers and how they think and go through the process. But there's not a lot of training there per se. It's learning kind of on the job.
Okay.
Given the amount of training required and experience needed, But also with all the technology we have going on these days, is there a spot where the branch locations aren't really needed? And I hate to say the loan officers, I gave you a nice plug a minute ago, but to say, can't that all be done online these days? Or like where does the branch and the actual loan officer we have to or get to speak to come into play? Is there a value there?
Yeah, yes, there certainly still is. I'll give you an example. A young analyst I know works with a large bank. He opened an account at a branch in a small town where he lives, because he just wanted that ability to go in and see real people and do his transaction with another person. And if he has a question, to get an answer, not to go online or be directed to some kind of a phone menu, when you call up. Also, one of the fundamentals I learned in banking a few years ago was character. You can have money, you can be a good business person, but how do you honor your obligations? How forthright are you? How much information do you give the banker? Do you just give it selectively, or do you want to be in a partnership with that person? So character, if you finance or invest in something with high character, you're probably not going to go wrong. And it's one of the issues that we see in business today, whether it's banking or industry, other business people, is what's happening with business ethics. I promised I'd pay the loan back. Now I can't. Oh, well, Mr. Banker, I'm hiring an attorney to fight you.
We've just got a little over a minute left, so I'm going to ask you a tough one. Do you think that we are going to conquer this problem about too big to fail with the banks? Do you foresee banks being careful enough that we won't have another scary situation like 2008? Or 20 years from now, are we going to forget everything we've learned?
Well, we may forget everything we learned, and certainly that's happened in the banking industry in the past. I'd have to say the regulators have to stay on top of the situation. We had, a few years back, we had the savings and loan crisis. Mm-hmm. And I said, well, if the banks can't police themselves, I guess somebody else has to. Oh, no, they don't. Unfortunately, there has to be some. I mean, sometimes regulations go overboard, but I would say that's an important part of it. And
so maybe we can do it with 20,000 pages instead of 100,000 pages of legislation.
Hopefully, yes.
Okay. Well, Paul, I really appreciate you coming to see us tonight. I think banking and housing are the two keys to really get this economy rolling. The unemployment rate's coming down, but there's a lot of people hiding out there that don't have a job, and we'll hope that gets better, and I think it will. So appreciate you being here. Michael, enjoyed doing the show with you. Tune in next week. Robin F. Bond, Esquire, from Transition Strategies, LLC. Is going to talk about employment and severance agreements. And for our viewers and listeners, we hope it'll be employment information that you'll be picking up. Tune in with us next week. As far as we're concerned, your money matters.